Ambrose Amodion, Chief Research Officer, Invest Data Consulting. How do you react to the trading activities from Tuesday up to this day, Friday? Your reaction?
Yeah, I would say it's a mixed market, in the sense that we saw, a two bull market and also two sell down market within the week. Yeah, despite that, it's, a short week of 4 trading days. The good thing that the market closed positive. We're seeing market extending straight 4 weeks of appreciation as a result of what change in the environment. One, they started a policy statement from the day of inauguration. That was on the May 29. On Tuesday, being 30th of May, we saw market gain almost 5.2 today. Since then, market has been an uptrend. Despite that, after that, we saw markets are trending to form what we call consolidation integral analysis. But the breakout we saw this week on that review, that market thought almost 60,400 before pulling back. But the sign that market have thought as high as 50,435.28. It tells you that market also is starting towards trying to break that height, and investors taking advantage of price rallying just within let's say 2 weeks, making up to more than 9%. And in this, that also have created value for investor. What we are seeing the last 2 days, today and yesterday, just profit taking activity in the market, because most of the companies still has a good value that still have upside their potential to go. For me, there's no cost for that. But as far that this government continue to bring out the guideline of their policy and implement and will see action, that will continue to shape the market. But because that investors should not just fall in love with the up market, because I tell people that sell in the up market and buy in a down market. People that bought stock, even yesterday, some of them are still complaining that, after buying it start coming down. As a trader or investor, know when the right time to buy. When market is kind of rallying, it's not the time to drop, because all will happen as what we call boot trap. But there's no cause for that to fear, because one, I said there's no fear. Since we expect to see more guidelines, and also earning seasons are ahead of us, that can also bring additional fundamental news. As we have seen the inflation figure for the month of May, investors are analyzing it, digesting it, and from next week they start reacting as a result of this fundamental news of the inflation. But more we'll see company fundamentals in the month of July to also shape the market in direction of the body language or the policy statement or the implementation of what we have had at the inaugural speech of the president. The good thing is that they have hit ground running. You can see how they finally pushing resources out of the system, and also the unifying of exchange rate has come immediately. Then it's not left for what I said in the morning, the monetary policy, where I see them to sit down very well. You can't control exchange rate, control inflation, and control interest at the same time. That means one will be left for the other two to control. That's why we're waiting to see what CBN and his team will be doing in the month of July.
Okay, so let's get Charles' view on some of the fundamentals that Ambrose has placed on the table for us to contend with as we look at activities at the Nigerian exchange this week. Charles, Ambrose said there's no cause of alarm. Do you subscribe to that cautious optimism, or you have a divergent view to it?
Yes, I think as a teacher who do a lot of research and teaching to new stockbrokers, I agree with Ambrose, and you can see what happened during the week is just to confirm what we have been saying in the classroom. Government policies affect prices in the market. The market will react when there is even just a pronouncement, and we are seeing that happening in the market. So you can see on Tuesday, Wednesday, market was up. In fact, on I think on Wednesday, people were even thinking that we are going to be having maybe another circuit breaker, but of course we didn't get to that 5% mark within that timing. But again, you now saw on Thursday the market, of course, that is obvious. I would have said it, profit taking. Friday again, you see some slight down in the pullback in the market. So all this is showing that the market is reacting. Of course, he has mentioned most of the technicalities, using technical analysis. You will see that, but again, I am very sure that the market is going to break over that 59,000, and of course, it during the week it went above 60,000 as the all share index. So we are seeing it, and people have even started suggesting that I hope we are going to be getting back to pre-2008, where the market got so high, almost 72,000 mark, and of course before the bubble does. But with this, we can see that the government of the day, like he has said, have hit the ground running. And if they continue like this, with this kind of pronouncement and implementing what they already said, of course, the market will react positively. Not only looking at it again, earning seasons is also coming. So investors are advised to position themselves. So we're going to be seeing mixed market again for next week, and of course towards the end of the month. Then getting to the month of July, of course, we'll see another rebalancing again, because of course even the NGX is going to rebalance some of their indices. So we're going to be seeing a lot of rebalancing. So for me, I think I still go with positive optimism, cautious, but at the same time, for any investor in the market, I always advise my students, plan your trades and trade your plan.